What is the best trading style? The honest answer is this. There is no single best trading style for everyone. For me, I started with price action, but it did not work well for me. Memorizing candlestick patterns was difficult, and many times I saw the market completely ignore support and resistance levels. After that, I studied Ichimoku clouds. I also tested classical chart patterns, trend lines, channels, moving averages, RSI, MACD, and different momentum indicators. And finally, I found Elliott Wave analysis, especially the minor method. I am not saying Elliott Wave is the best method for everyone, but for me, it has definitely been the best. If you want to use Elliott Wave correctly, you need to focus on three important things. Number 1, pattern. Number 2, time. And number 3, momentum. The first one is pattern. In Elliott Wave theory, we usually look for a 5-wave impulsive move, followed by a 3-wave corrective structure. The second factor is time. Price correction is important, but time correction is just as important. For example, if a major move lasted almost 10 years, you should not immediately jump into a trade after only a few weeks or a few months of correction. You need to respect time. Now let's move to the third factor, momentum. Momentum is one of the most important signals on any chart. For momentum, I personally use the stochastic RSI. Whenever I want to catch a long-term trend, I start with the monthly chart. If the monthly stochastic RSI enters an extreme zone, either overbought or oversold, that is the first warning signal. It does not mean I enter the trade immediately. It only means I start paying attention. After that, I go to the weekly time frame. If the weekly momentum confirms the monthly momentum, that is the second check mark. At this point, I start preparing for a possible trading setup. Then I go to the daily chart. If the monthly, weekly, and daily momentum are all aligned, the setup becomes much more serious. This is where I start looking for an actual trade entry. But should you enter a trade just because momentum is overbought or oversold? The answer is no, absolutely not. For example, look at the S&P 500. Sometimes the market can stay overbought for months and still continue moving higher. That is why momentum alone is not enough. Momentum tells you when to pay attention, but your trading method tells you where to enter. For me, Elliott Wave helps me find the optimal entry point after the momentum warning is already there. So the process is simple. First, find the Elliott Wave pattern. Second, respect the time correction. Third, check momentum on the monthly, weekly, and daily time frames. Momentum gives you the timing zone. Elliott Wave gives you the structure. And your entry should come only when both of them support the same idea. This is how you stop chasing random candles and start trading with a real plan. Follow the candle for more market analysis and trading education. Telegram t.me/the_candle.